Hey guys, welcome back to the Shipmate YouTube channel. This week we have an exciting guest. We're joined by Alex from Payability, and he's going to talk to us all about financing. Hey guys, so I'm really excited. This week we have Alex from Payability joining us. He's the head of partnerships and business development. Thanks so much for coming on, Alex.
Yeah, thanks for having me, Bill.
So I wondered if you could just give the audience a quick overview of what Payability does and really where your guys' core competencies lie.
Yeah, so what we do is we're a technology company and we provide financing and payment solutions to e-commerce businesses and those selling on marketplaces. And so we have a handful of products, but essentially our flagship product, Instant Access, is designed for those getting paid on delayed terms on marketplaces. We want to get them paid faster. And then our Instant Advance product, we want to project what we think that seller is going to do next month in sales and give it to them in an upfront lump sum of cash. And that way they can reinvest in the business and things like marketing and inventory and grow their business.
Yeah, I mean, that's huge. I mean, I wish there was a solution like this around 5 years ago when I got started selling because, waiting, 2, 3, 4 months for payments from Amazon and some of the other marketplaces is just, absurd. And that's why, I really thought it was interesting to have you guys come on and talk about, using leverage capital, taking those pay advances, getting those daily payments in order to make sure that you're able to run your Amazon business as efficiently as possible. And, I know that there's a lot of happy Payability customers out there. So we're super happy to have you guys on talking about this because we want people to know what options are available to them.
Yeah,
So
and I think, well, just to play off that, I think, in general, when you're talking about capital and finance, it is about having the options. And it's about, like being able to do your homework and have the best options available so you can make the best informed decision.
yeah. So what I was hoping is we could kind of go over, what are some of those benefits? What are some of the reasons why you would want to pursue, some leverage capital and, really give that cash infusion into your business? Because I know some of the reasons are obvious, but some of the reasons, are also a little more hidden or things that you don't really realize until you have that luxury.
Yeah. And so I think just jumping right into it, like when we're talking about cash flow and we're talking about free cash flow, meaning capital that you can actually put to work because it's not already set for, a bill or, employee salary and things like that. Cash flow is the lifeblood of businesses at the end of the day. If you're not well capitalized, you're going to miss out on opportunities. And I think that is the core of why companies look to leverage outside capital is so they don't miss out on those opportunities. But then there's also pain points that you can solve with having capital. Um, you know, you never want to be in a situation where you can't make timely payments to your own vendors or suppliers. Stocking out during a holiday rush or other peak season. In the case of Amazon sellers, losing the buy box because you're out of stock. And then just like what we found is, stocking out is probably one of the most detrimental things you can have to your business because it turns someone who could be a happy customer into someone who will write a bad review because they've got their sights set on the product and they want it. And then they find out they can't get it. And that, just naturally, it tends people to be upset.
Oh yeah, especially with like Amazon and the other marketplaces like eBay or Walmart. I mean, sales velocity is everything. I mean, if you're not constantly selling and churning through product, Amazon recognizes it, Walmart recognizes it, and you show up lower. So making sure that you're constantly stocked, you always have inventory in stock, and or you can get more is a really important thing as a seller that I really think a lot of people that are new, miss the value of just having inventory.
Yeah. And it comes back to those reviews again. What we see is, and it's kind of natural. Most people don't just give a 3-star review, and people don't give like C pluses. They're either going to give a 5-star review because you outdid their expectations. They're going to give a 1-star review because they're upset. And getting your sight set on a product you want, let's say it's timely, you want something for the weekend, and it's out of stock. You've got your heart set on it. That leads you to write a negative review because you're upset. They just ruined my weekend party. I didn't get that, outdoor Bluetooth speaker I was looking for, or something similar. And it's like, those things can be controlled with keeping inventory, turning your inventory faster, and it usually comes back to capital is the reason why that's not able to be done.
Yeah. So another thing I really thought was interesting right away came to mind when I was like, we're talking about financing and we're talking about money and fintech and all these exciting subjects today is, risk adverse people. Because, there's a lot of people that, see taking financing or exploring financing options as a risk or a negative thing. So I was hoping you could talk a bit about some of the fears and misconceptions around this type of financing and kind of give people the full picture, the full view, so they understand what risks they're taking on and what risks they and what might not actually be a risk they perceive being there on the surface.
Yeah, and so I mean, I think right off the bat, like most people have an experience with finance in their life, and it's usually binary. They had a good experience or they had a bad experience. And like sometimes it could be, your family had a bad experience with a mortgage. It could be that you had a lot of student debt. It could be that you got over your skis with credit cards. And so trying to manage, like some of those expectations and some of those bad feelings towards finance, and then understanding there's a lot of different types of financing opportunities. And so you always want to be looking at the ones that are right for your business. So when you're thinking about like, risks of like which financing option do I take, first you want to do some homework. You want to, listen to a video like this. You want to do some research. You always want to know who you're doing business with, and then you want to understand what you're actually signing up for. And I think that's one of the risks people often take is, everyone's moving towards DocuSign contracts and e-sign and things like that. And what happens is you still need to actually read them. And we're all in this like one click, instant on demand mentality. But when you're entering into a financing agreement, you want to know who you're partnering with, and you want to actually read the fine details of the contract. And any reputable company you're working with should be willing and able to answer any questions you have about the contract, about the rates, about the services, about the offers, and all the things that kind of make up the relationship you're entering into. Because it shouldn't just be, I'm looking for quick cash. It should be, I'm looking for a financing company who could be a partner and help me grow my business for the long term as well. And then there are, different financing options for different things. If you reached out to Payability and you said you were looking to buy a warehouse, we'd be the first to tell you that our capital is not really designed for that. Because what you want is you want your capital to match the duration for the use. So if you're going to buy a building, you want to have like a 20 or 30 year payback schedule, because that's going to similarly match the duration of how long you're going to use that building. If you're going to buy a car, you want to pay that off around 5 years, because that's going to be the most useful value of that car. Similar with like an equipment, if you were buying a forklift, you want to look at like 5 to 10 year financing. So you're going to probably have that forklift for 10 years plus. When you're looking at capital as an e-commerce seller and you're looking for inventory, you don't want to take on a 3-year loan, buy that inventory, sell that inventory in a matter of months, but still be paying for the financing for that inventory over years. You want to have a duration that matches your use. So in the case of e-commerce, we've purposely structured our capital short term, and that way you can take capital, pay it back, and then have capital again available to you to keep kind of matching the cycle of your sales cycle. And so I think, a lot of times where the misconceptions and the risks come in is people get really hung up on having the cheapest monthly payment or having the cheapest weekly payment. But what you don't always realize is, if you look at a mortgage, you could have a 3.375% mortgage or like a 4% mortgage, but if you're paying that off over 30 years, the actual cost of the capital is going to be way higher than that APR makes you think. And so what you want to understand is, what is the actual cost of the capital? And people get it confused. They look at, let's say it was to fund you $10,000 and you're going to pay me back $10,500. People look at that $10,500. And what you have to understand is the cost of that capital is only $500. The $10,000 is you returning the capital that you originally took. So then you want to basically look at it and say, it's costing me $500 to take the capital. Am I going to be able to create opportunity that is, enough? So if I have, let's say, a 5x ROAS, using that same $10,000 example, and I can take that 10,000, turn it into 50,000 in sales, and then I return that 10,000, which leaves me at 40. The capital cost me $500. So now I'm at 39,500. Then I have to ask myself, Was the opportunity worth it to spend $500 to create 39,500 in opportunity? And that's kind of the way you back into, does a financing decision work for me? What is the cost? What is the opportunity? Does it make sense for my business model and my margins to spend that cost to create that opportunity? It might make sense in the short term, but not the long term. It might make sense in the long term, but those are the types of quick math that we want to do when we're understanding how to think about capital.
Yeah, no, that makes a lot of sense. I mean, I was listening to the radio today, and there was there was a commercial, and it came on, and they were saying we're in this world where everything's DocuSign, like you said. You get your car insurance in 15 minutes or less. But when you're making a major life decision or a financing decision, do you really want to make that decision in 15 minutes or less? Like do you really want to look that way? And I think it's really important, like you said, to do your research. Know how much you're going to pay. Know how quickly you're going to pay it. Know how long you're going to use the thing you're buying, or how much opportunity is there, like you said. And I really think those are all really, really great points. And, what I want to talk about next kind of goes along with that. I want to talk about, what does a good fit for payability look like? What does, somebody who could benefit from this look like? And how do you know if you're somebody who's ready for this kind of thing?
Yeah, it's a great question. I think, we have sellers as small as $2,000 a month in sales. We have customers as large as 10 million a month in sales. The thing they all share in common is that they're selling on like a marketplace, or they're selling on their own website, but that they're looking to grow their business. You do not want to leverage outside capital if you're running a hobby. And so I think in like certain marketplaces, they tend to be a little bit more hobbyist. I know in the eBay world, we have pickers, and they go to estate sales, they go to garage sales, and there the thrill is more the hunt of finding the product. But if you're running a business, if you're doing it as a hobby and not trying to have a growing business, leveraging outside capital can't be put to work in those instances. So you're basically just taking on more costs, because anytime you leverage outside capital, there is a cost associated with it. So if you're going to leverage outside capital, you want to be able to put that to work to generate more revenue. And so you want to do it ideally in growth. With e-commerce sellers, we know some of the things that can grow their business are investing into advertising, investing into inventory, maybe entering new product verticals, maybe hiring a couple virtual assistants to handle the busy, Q4 seasons, or whatever your busy holiday season is. And so really it's about those looking to those looking to grow their business and be able to sell more, take on those opportunities. And then when we talk about like what a fit is, on marketplaces, our flagship product, we're turning those net 14 payments into net 1 payments. We're turning those net 30 payments into a net 7 payment. So would your business benefit from being able to get paid faster from the marketplace, so you could take that money and then use it again? It's called negative working capital. It sounds counterintuitive, but the idea is, if I sell something and I can get paid for it fast, and then I can use that money before I have to pay my suppliers to reinvest back into business, I'm getting twice the use out of the same dollar. And if I can do that a couple times, I'm leveraging the same dollar multiple times over and over again before I have to actually pay for the goods that money would go towards. And so that can ramp up your sales, that can turn your inventory faster. And essentially, you're basically getting more use out of the same capital than waiting around to get paid for a sale you've already made.
Yeah, no, that makes a lot of sense, because like I said, there's a lot of people out there who are, they're grinding away, they're trying to grow, and they really just need that extra push, that little bit of extra funding to get them to the next level, get them the supplies they need, so that way they can continue to grow their business. I was wondering, do you have any stories or any like examples you could give us of somebody who has benefited from using leveraged capital?
Yeah, absolutely. And on our YouTube channel, we have a lot of customer testimonials. But being able to work with small sellers, we've seen so many sellers that have started with us doing a couple thousand a month, and after being with us for a year, they're at that $30,000, $40,000, $50,000 a month, because they're looking to grow their business. So one great example is Josh over at Go Buddha. He became a customer of ours during COVID. He was the executive chef for the Cleveland Indians, and it was a cool guy, great job, and the stadiums weren't having any people in. And so he thought to himself, he had to provide money for his family, and basically saying, like, what do I know how to do? Well, I know how to feed 40,000 people. Can I turn that into a business? And he created a meal prep kit. And he did his meal prep kit on Shopify. And he has a passion for healthy living, so he worked that into the meal prep kit itself. And essentially, he came to us looking for capital to grow his business. And he credits us with being able to help him when no one else would. I would say we credit him with having such a great idea and great business. But essentially, as a newer business, being just kind of starting out, he had trouble getting capital to be able to keep up with the demand. We were able to provide him our instant advance product and basically capital a couple times, and he grew the business so much that he actually opened a brick and mortar store selling the meal prep kits with the capital and the sales that he did with us. And so he was able to, for us, it's always interesting because we work with e-commerce sellers, and here was an e-commerce seller who then brought it into a brick and mortar in real life. And he did that because we were willing to take a chance on his business when, frankly, other people were saying, you don't have enough time in business yet. It's a little bit risky. We're built to be able to take on those risks. So we were able to help Josh. Another great example is it's called affordable allergy testing. It's an allergy test kit for dogs. And they were selling on Amazon. They were doing a great job, but they weren't getting paid fast enough to be able to grow and sustain the business. So we were basically able to get them paid faster, and they were able to use that extra capital that they had to actually provide health insurance to all their employees. And we have story after story of just sellers and e-commerce merchants who came to us, because traditional banks still look at e-commerce like a fad, and it's unfortunate. Some community banks have been really enterprising with e-commerce sellers, but traditionally banks think, oh, you're selling online, nothing's going to prevent you from stopping your business tomorrow. That's too risky. Whereas maybe like a restaurant or a retail store, they have the lease. They're not going to just shut down. They have the employees in the store. They're not just going to shut down overnight. And so that risk is too risky for traditional banks. And so what happens is you have a lot of people who have great thriving businesses that the banks don't really understand them. And that's really where we built this company. Was we do understand you. We do see that you have a great business, and we want to get capital in your hands so you can take it to the next step.
Yeah, no, that's really interesting, especially, to see somebody go from e-commerce to physical retail. That doesn't really happen that much anymore. And it's really cool to see that happen. It's also really cool to see that, you can use this for out of the box things, right? You don't have to just use it for inventory or I need a new printer, my printer broke. You can use this for things like health insurance for the employees. You can use this to hire another staff member. There's the uses are endless. As long as you have a use and it benefits your business and helps you grow, this is something you can use. And I think it's really cool for that reason. The next thing I really want to talk about is, things in e-commerce are ever changing. Things with fintech are ever changing. I mean, it's a really hot space, especially in the stock market. And I was wondering, what do you see in the future for e-commerce and fintech colliding, and what kind of trends do you see in the near to mid future?
Yeah, and it's a great question, and it's something I think about all the time. So I think one of the things we're going to keep seeing more and more of is this idea of embedded fintech. And so, if you think about Amazon lending, Shopify Capital, or Stripe Capital, or what we do with with the marketplace Newegg Capital, powered by Payability, people want this idea of embedded fintech, and that is they want all the power of fintech, the uses of fintech, whether that's payments, whether that's foreign exchange, whether that's capital, whether that's everything in between. They want that already in the product they're already using. If they're in the dashboard, if they're logging into their dashboard every day in Amazon, or they're in their dashboard at Shopify, or they're in their dashboard at Newegg, or they could be in their dashboard with Shipmate. They want this idea of that capital is available for them to solve the pain point that they're seeing in the moment. And so we're seeing a lot more of this idea of embedded fintech. It's something I actually work on a lot with a lot of our different partners, is getting fintech into the platforms where they make sense, where people are sitting. So you don't have to necessarily always go looking for it. It's right there. So if you're looking at inventory analytics and you're stocking low, being able to press that button that allows you to finance your next inventory purchase rather than having to go chasing around and looking for it. So we're going to see a lot more embedded fintech. I think we're seeing a lot of things happening in the payment space, which is just genuinely a lot more competitors piling in, which is great for everybody because competition drives down rates because we all have to compete for your business. So usually, merchants tend to win out when everyone else is competing for their business. I think we're going to see, in general in e-commerce, I think COVID has been like a tectonic plate shift in the way we think about how we buy things. And I think that a lot of people who weren't buying things online, especially like online groceries is a great example. Online groceries has exploded in the last year. And what it is, if you think back to like World War II, the idea of processed food, whether it's healthy or not, it's still, a modern marvel. It didn't exist. We had to create it to be able to feed the troops overseas. And that created a manufacturing boom for different types of consumable products. And we're in that same type of shift right now, which is people have learned the convenience of e-commerce. People love the idea that you can order something on your phone and have it ready at the curb for curbside pickup. People love contactless payments. People are really starting to realize that I can have anything I want delivered straight to my home. And because of an event that happens globally, like the pandemic we're in, people were forced to start doing these types of things. And now they're learning what all of us in e-commerce have known for a while. It's convenient. It's great. It's great to have options. It's great to be able to get things delivered. It's great to be able to pick things, off your phone that are on a shelf and then have them ready for you at the curb. And so I don't think that's going to go away. I think we've just added so much more to the demand side and the buy side of e-commerce, because even when things open back up, yeah, you're going to want to go into a store where it makes sense. And I think you're going to want to like get out there into bars and restaurants, but are you going to want to trade the convenience of being able to order things right on your phone and then be able to go get them or have them delivered to you? And I think what we're going to see is some really interesting hybrid models. I think Peloton is a great example of this. You go to a Peloton store, and I don't own a Peloton, full disclosure, but I know how it works. You basically go into a Peloton store and you try it out. And you're having a consultative sales process in the store, but then typically you go home and then you order on the website so it can be delivered to your house because you don't want to take a Peloton home with you. They're heavy machines. And so there it's like starting to bridge where does e-commerce start and end in that? Is going on the website to buy that just essentially a point of sale terminal that's in your home or on your phone? Is that an e-commerce sale, or is that an in-store sale that got fulfilled online? And I think we're going to see those gray areas happen more and more, frankly, as people like realize, what do I want for the in-store buying experience? Maybe it's luxury. Maybe it's something so expensive I would never buy it without touching it. Maybe it's I want to test it out because like it has to have a right fit with something like shoes. You always still like to try shoes on, but bridging that in-store experience with the ability to fulfill it directly in your home, I think is going to be an emerging trend that we see more and more of.
Yeah, no, that makes a lot of sense. I mean, the immediacy factor, instant gratification. I mean, we're getting to the point where gratification is almost instant. I mean, I can place an order right now, 25 minutes later, boom, food. And it's getting to the point where, you see brands like CVS and PetSmart, partnering with these instant delivery services as well. And I think you're just going to see things get better, faster, quicker, cheaper. And, it's just going to continue to ever improve, and the demand's going to continue to grow as things get even better than they are right now. I mean, I can't even imagine what the world's going to be like with one-day delivery. Yeah. So anyhow, I thank you for coming on, Alex. We learned a lot. I was hoping, you might have some final thoughts for us and, tell us how we can find Payability and get in contact with you guys.
Yeah. So, I mean, final thoughts would be, when you're thinking about a decision like financing your business, you want to do some research and you want to talk with who the provider would be. So I would say to everyone, like, check us out, have a conversation, see if it's a fit. For us, we don't do any types of credit checks. There are no obligations or commitments to get an offer. So, see if we can be a good resource for you, because that's what capital should be. It should be a resource that you use for your business and, working with a partner that understands what your business is. And as far as checking us out, I would say, go to go.payability.com shipmate, because for everyone in this audience and for anyone that is a Shipmate customer, will do a $250 sign-on bonus. So the first $250 in fees are on us. So it's go.payability.com/shipmate.
Awesome. Thank you so much, Alex. We really appreciate having you on today, and I hope everybody learned something today. Go ahead, check Alex and the rest of Payability out at that link. And thank you guys so much for watching.
Thanks for having me, Bill.
Yeah, no problem, Alex. Thank you for coming on. Hey guys, thank you so much for watching our video. If you could take a moment, give us a like, give us a subscribe, give us a share. We're really trying to get to 2,000 subscribers, and we need your help to do it. Thank you guys so much, and we'll see you next video.